Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Thursday, August 11th, and it's about 2:30 on the West Coast. The markets have been pretty volatile today, with the stock market starting up and then ending about even. The bond markets, which heavily affect my mortgage rates, have had a pretty negative day based on some technical stuff having to do with an auction that didn't go too well. But I wanted to touch on two different reports that came out over the last week that affect my side of things in two different ways and explain to you why that happens. The first piece of information I want to share with you, we had talked about last week on Thursday. I had mentioned on Friday we were going to get some pretty important job numbers from the BLS. And so this is that report that came out, and the expectation was for the unemployment rate of 3.6 to stay about that, possibly even go up based on some indications that hiring had slowed and some layoffs have started. Instead, we got a positive job a report that showed an increase of 528,000 jobs and unemployment dropping from 3.6 to 3.5%. So on the surface, this all sounds great for our economy. I'm sure you heard it touted over the weekend as positive news nationally for good reason. It comes across, again, as pretty positive. This actually affected mortgage rates in a very negative way. And the reason is that with this report, we show an increase in workers, but the last two GDP readings for the last two quarters have been negative. So if you take that and combine that, we have less production and more workers. And that's the opposite it should be. If you have more workers, you should have more production, and less workers should be less production. Instead, we have how it is right now, where you're basically producing less with more people, which is very inflationary. And like we've talked about before, the bond markets and therefore my mortgage rates hate inflation. So this is a very inflationary report, and the markets reacted accordingly. And the bond markets had a bad day, and mortgage rates jumped, I believe, over a quarter of a point nationally. And then the other thing to keep in mind with this BLS report is the way they came up with these numbers is a little bit of math gymnastics. They also do a household survey where they call people that are unemployed and talk to them and find out what the situation is. And that survey actually shows a decrease in full-time work and an increase to cover all these new jobs. The increase, it seems to be mainly from second jobs and part-time work. So that's a completely different picture, this rosy picture of all these jobs being created compared to, hey, Joe American had to go get a second job to make ends meet. And then if you look at that data, that's kind of pointing more in that direction. So again, that's something to keep an eye on. Unemployment weekly claims ticked up again today. So we're seeing, a slight increase every week, it seems like, in unemployment claims. So eventually that's going to make its way over to this BLS jobs report. And we'll see the jobs decreasing. So again, positive report had a negative effect on my side of things. And the second piece of data that came out that's pretty important came out yesterday was consumer price index, so the CPI, which measures inflation for the consumer. We also got PPI today, which also kind of followed suit with this, came down from where it was. So if you look at the numbers across the board, they expected to go up by 0.2, and it didn't go up at all. So that actually, since they look at things year over year, that actually made a drop from 9.1 to 8.5. So that's the headline. If you look at the different things in here, really the big negative, the big drop, the thing that helped the most to get this under control was gasoline prices dropping. And since in this country, every good we sell at some point ends up on a truck and is delivered via truck, 99% of the time, gas prices definitely have a major effect on all sorts of industries and all these goods. So we look in energy and gas, that's down, that's awesome. But we do see rents going up. We see food going up quite a bit. So that kind of stuff obviously is not good for normal folk. We don't want to have to pay more money for food. We don't want to have to pay more money for housing. That is all still a negative stuff. So really, and the same thing happened in the producer price index is the gas prices, the cost to deliver stuff went down so much. That's creating this, positive in our eyes reports. But if you look a little closer, some of those items that are ticking up are also things that affect, a normal person from day to day. So we got to keep our eye on that, especially the rent one. Like we had talked about, with rent prices going up, that creates housing instability. Someone's on the fence trying to decide whether they want to rent or they want to buy. oftentimes, they're going to be better off buying because they no longer a landlord in charge of what their housing payment is going to be. They're going to have a fixed mortgage. No longer is a landlord deciding if they can have an animal, that kind of thing. So taking care of your housing stability, especially people with children or job considerations where they have to be in a certain area, that goes a long way to making the person feel better. And again, housing stability, not someone else in control, not being thrown for a loop, but being in control of your own housing. And so with all this being said, basically goes back to what we talked about last week. What's worse for our economy, inflation and recession? Both sides are going to have their proponents and they're going to argue each way. But you're going to see a lot of that in coming weeks. Maybe we don't have to raise the Fed rate anymore since inflation's coming down. I would say we need to make sure inflation is completely under control before we start pivoting. But again, you're going to see a lot of talking heads talking about different things. So that's all I wanted to cover for you guys today. If you have any questions at all, if anybody needs anything at all, if you know any of those renters that really should become homeowners, send them my way and I'd be more than happy to help them. Besides that, I hope you guys have a great week and a great day, and I'll talk to you soon. Bye-bye.